Okay, I'm going to show you how to write some closing journal entries, and I'm going to use the information that's on page 236 of your textbook at the end of chapter 4. It's a summary problem, and if you take a look at that page, you have the adjusted trial balance for Martinez Advertising Services. So we need to close out our temporary accounts, and that's going to include all of our revenue accounts, all of our expense accounts, and our dividends. So the information you need is going to be at the bottom, starting here. You have your dividends, and then you have service revenue, and then you have all of your expenses listed. Okay, so I'm actually going to start my first closing entry by closing out service revenue, and service revenue has a credit balance of $64,300, and you're going to close this account out to income summary. So let's see, our date here is going to be December 31st. Alright, make sure you can see all of this. Alright, so the date of our entry is December 31st. And since service revenue has a credit balance, we're going to close it out by debiting service revenue. For the account balance of $64,300. And then we're going to credit income summary for $64,300. Okay, and that's to close out service revenue. I'm going to skip the brief explanation. So the next thing I'm going to do, if we go back to our adjusted trial balance, I'm going to close out all of these expense accounts. Okay, and all of these expense accounts have debit balances, so I would close them out by making credit entries to each expense account. Okay, and I'm going to close them out by debiting income summary. So on 12/31, I'm going to debit income summary for my total expenses. So if I were to add up my total expenses in this problem, they would equal $23,300. And then I'm just going to list my individual expenses as my credit entries. I have salaries expense of $16,500, supplies expense of $800, depreciation expense, furniture is $2,000, depreciation expense, buildings is $1,000, advertising expense is $3,000. Okay, so if you add up all of these credit entries here, they also need to equal whatever you've debited into income summary, which is the $23,300. Okay, so if I were to post these to my general ledger, and I can do that by showing what it would look like in a T account. Here's my T account for my income summary. my first journal entry, I posted a credit of $64,300. So I'm going to show that here. And then in my second journal entry, I recorded a debit of $23,300. So I'm going to record that here. So if I were to calculate the balance of my income summary account, I will have a balance of $41,000. And since this is a credit balance, that tells me I had net income of $41,000. If my income summary account had a debit balance, then that would tell me I had a net loss. Let me make sure you can see all of this. Okay, here's my credit entry to income summary. That's from closing out revenue. Here's my debit entry from closing out all my expenses. And so $64,300 minus $23,300 is going to give me my credit balance of $41,000. So I also need to close out my income summary account, and I'm going to close out income summary into retained earnings. And since income summary has a credit balance, I close it out by making a debit entry to it. So if we go back to our entries, on 12/31, I'm going to debit income summary for $41,000, and I'm going to credit retained earnings for $41,000. Okay, and the last closing entry we need, let's take a look at our adjusted balance sheet again. We need to close out dividends, and the adjusted trial balance says that this company paid out dividends of $25,000. That's here. And dividends has a normal debit balance, so we're going to credit dividends and debit retained earnings. So here's that entry. 12/31. Okay, when we pay dividends, that's going to reduce retained earnings. So it's a debit to retained earnings of $25,000 and a credit to dividends of $25,000. And this will bring the balance of all our temporary accounts to zero, so we can start fresh in the new accounting period.